Let's talk about money. Seriously, the way you earn it, save it, and spend it is changing faster than ever. But this isn't just about some new payment app. We're talking about a massive shift in what money is at its very core. You tap your phone to buy coffee, you Venmo a friend, it all feels super digital and modern. But behind all that, it's mostly the same old system of banks and national currencies that we've used for decades. So what happens when that system gets a real, honest-to-goodness technological challenger? Well, that's exactly what's happening right now. We are standing at a major fork in the road with two totally different visions for what's inside your wallet. On one side, you've got this grassroots, decentralized revolution. And on the other, well, the biggest financial players in the world, governments themselves, are finally making their big move. So let's explore path number one. This is the one that kicked off this whole conversation in the first place, the crypto revolution. And this path asks a pretty radical question. Who should really be in control of our money? Okay, so at its heart, a cryptocurrency like Bitcoin is basically digital money that no government or bank issues. Instead, it's built on this public, shared ledger, the blockchain, that lets it exist completely outside the traditional financial system. Now, what's really fascinating here are the ideas behind these features. Being decentralized means no single person or group can control your funds. Having a limited supply, well, that's designed to stop its value from being watered down by just printing more, which happens all the time with regular currencies. And peer-to-peer means you're cutting out the middleman. The whole system is designed to give financial power back to individuals, not institutions. Well, you can bet that governments and central banks were watching the rise of crypto, and they weren't just going to sit on the sidelines. They've come up with their own answer. And that brings us to path number two, the official state-approved version of digital cash. A central bank digital currency, or CBDC, is pretty much what it sounds like, a digital dollar, a digital euro, you name it. It's not a private asset like Bitcoin. Nope. It's a direct IOU from the central bank. You can think of it as the digital twin of the cash in your wallet, issued by the very same authority. And this is where the two philosophies just completely split. A CBDC is centralized by design. It's official legal tender, it's totally regulated, and this is the big one, it's traceable. The goal here isn't to start a revolution, it's to evolve. It's about modernizing the current financial system to make it more efficient, all while keeping the government firmly in the driver's seat. And make no mistake, this isn't some far-off futuristic idea. It is happening right now. As you can see here, countries all over the globe are diving in. You've got the Bahamas and Nigeria that have already launched theirs. Then you have economic giants like China and the European Union who are deep in development. The push for state-controlled digital money is a huge global trend. So you've got these two incredibly powerful competing visions. And when you strip away all of the tech jargon, you realize they're really fighting over one fundamental thing, the balance between government control and your personal privacy. From the government's point of view, a CBDC is just a simple upgrade. As this quote puts it, it's just digital cash, nothing more. The idea is to make payments run smoother and cut down on the costs of handling all that physical paper and coin, all while the central bank stays in charge. But listen to this next quote. It comes from the head of the Bank for International Settlements. That's basically the central bank for all the other central banks. He said they will have absolute control and the technology to enforce that. Whoa. A CBDC could give authorities a window into every single purchase you make. That tech could let them do things like put restrictions on what you can buy or even apply negative interest rates directly to your wallet. And this table just lays it all out crystal clear. Look at the difference. Control, users versus the government. Privacy, sort of anonymous versus completely traceable. Value, swings with the market versus stable and pegged to the national currency. One is built for a borderless global future. The other is meant to strengthen the national economy. They're just fundamentally different tools built for completely different jobs. But of course, it's not all sunshine and rainbows for either side, right? Neither of these paths is a perfect solution, and both come with some pretty significant risks and potential consequences we really need to wrap our heads around. For CBDCs, one of the biggest risks is, well, will anyone actually use them? It all boils down to trust. Just look at this number from Nigeria. The government pushed its e-naira hard, but the adoption rate is less than half of 1%. Meanwhile, in that same country, over half the population has used crypto. It's a huge lesson. Money is a social agreement. You can't just force a new version on people if they don't trust it. And then there's this wild, almost ironic risk that the central bank's own experts are worried about. Since a CBDC would be the absolute safest digital money you could hold, it could actually make a financial crisis worse. Think about it. If there's a panic, what's everyone going to do? They'll flee their commercial banks and pour money into their super safe government CBDC wallet, all with a few taps on their phone. A digital bank run could happen at a speed and scale we've literally never seen before, and it could rock the entire banking system in a matter of hours. So at the end of the day, both paths have some serious potholes. On the crypto side, you've got that crazy price volatility that makes it tough to use for everyday payments, plus real concerns about its use for illegal stuff. And for CBDCs, the challenges are just as big. You have the massive privacy issues we've talked about, the huge technical challenge of building a system for an entire country, and the risk of leaving behind people who don't have good digital access. It's a trade-off between market chaos and state control, and neither one is a simple fix. So after going down these two very different roads, we're left with one final, absolutely massive question. Which future do we actually want to live in? See, this isn't really a debate about technology. It's a debate about our values. We're being forced to make a fundamental choice. What do we care about more when it comes to our money? Is it the stability and security that a centralized government-run system promises, or is it the freedom and personal control that a decentralized one offers? And that's the question I really want to leave you with. Because as this tech keeps moving forward, this choice is going to get more and more real for all of us. It's a question about the very nature of money itself, and about the relationship between you, the economy, and the government. And whatever answer we choose, well, it's going to define our financial world for a long, long time.